You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Options Insider Radio.
Expert interview.
But you know who didn't head out of town? He waited to do the show. We had to bump him from last week, but we got him back again this week. He is the Flowmaster himself, a.k.a. Mr. Henry Schwartz, a.k.a. I don't know what your title is over there at CBOE now, sir. You have a very long and complicated title over there.
No, that's not. That's not good. I'm the head of market intelligence in the data and access group within CBOE Global Markets. So it's not that long.
There we go. I knew it was something along those lines.
and I'm still the Flowmaster.
You'll always be the Flowmaster to us, sir. All right, listeners, now it is that time. We have a rare treat. Our rescheduling from last week actually works out because now we have the perfect time to have the Flowmaster join us for a nice mid-year update, a mid-year look back on the world of options. Obviously, June coming to an end, July 1st now, looking back at the first half of the year. Mr. Flowmaster, sir, what were some of the trends and highlights that caught your eye so far in 2022?
Sure. So I ran the numbers right before, and it is great that we have end of June right behind us. So industry volume is just topping 5 billion contracts, which is an average daily volume of just over 40.3 million contracts a day. And that's up 6% on an average daily volume market-wide over the year before, which was a record, on top of the year before that, which was a record. So, so 6% growth is what we're looking at market-wide. But what's interesting when you kind of look under the hood is the between ETF options, single stock options, and index options, how that's shaking out. The single stock option volume, average daily volume, is about 22.1 million contracts a day. That's down 12% from last year. So now it had exploded. It went from about 16 million to 25 million from 2021. So that's a decrease. So that we're seeing less of that. That is really I believe it's directly connected to the fact the market's pulled back and so much of that retail single stock flow has disappeared because those traders, at least the ones that were just kind of blindly buying calls into a bull market, have obviously have lost their money, or at least some of their money. The growth, though, is if you look at the index volume, the index option volume now is running about 2.5 million contracts a day. So that's up 26%. Over the year before. That's the highest. I don't think we're running at all-time records, because if you go back around 2012, I think it's higher, but it's the highest in the last 5 years, which is what I grabbed. So 26% increase in index activity. And that is coming from, like I said, the fact that we've kind of swung back into some traditional hedging, has woken up. And then also a lot of new stuff going on, right? Like, CBOE came up with the curb trading session, which means basically we don't close it at 4:15 anymore. We pretty much go straight till 5 o'clock, and then you have this, the global trading hours, which start at, I believe, 9 p.m. New York time and run all the way until the next morning. So the CBOE is moving to this 24/5 index trading, and we're kind of almost there. So that obviously helps volume as well. And ETF volume is up 44% from last year. So at least on an average daily volume. And that is, that's kind of coming from the fact that you see a lot of rotation, right? If few weeks ago, what everybody was talking about was people dumping out of the COVID stocks and into the value stocks. ETFs are a nice, efficient way to do that really quickly. So that to me, it's great. I predicted 10 billion contracts, and it looks like we're tracking on that. One thing that I thought was interesting, and I know this is volatility views, but I will mention that the splits, these 20-for-1 splits, are not quite doing much for volume, which we knew we weren't going to get a ginormous jump, but I was a little disappointed, that we volume option volume doubled or so. But on a 20-for-1 split, you kind of hope maybe you get 10x for at least a month or two. But
we are seeing Amazon top in the volume list a lot now, though. So that working at least there locally for Amazon.
Yeah, but not to the multiplier that you kind of hope.
That's true. Any other highlights, sir, that are resonating with you?
I'm keeping an eye on trading an occasional nanos option. They still have some challenges in the market quality. We're working on that, but I'm actually, next time I go to Chicago at the end of this month will be to tape some nanos videos. So, I'm gonna keep playing around with those. I think they're an incredible learning tool. When you can go trade a $4 option, then it's actually a $4 option. Instead of buying a cappuccino, you can be like, you know what, I'm gonna buy a call and kind of see how the afternoon goes. And they're fun. They really are fun to trade.
Well, I'm glad to see that you are a fan of your own products, sir. That's always a good sign. That's the first step. If you hate your own thing, then it would be no fun. So Henry accounting for all the flow out there in the nanos.
Not all
right
of it.
Now.
Just some.
Options Insider Radio.
Expert interview.
An able guest joining us here to help me hold down the fort this week, Mr. Saad Hussain, the CEO of Vesica Technologies, of course, the creator of a platform you folks know and love called Shift Search. Saad, welcome back to the network and welcome to your first time. Actually, no, maybe you've been on with us once before on Options Oddities, sir.
That's right. How you doing? Thank you so much, and happy early 4th to everybody.
Yes, and I apologize for the rescheduling from last week. We had some last-minute issues that came up that necessitated moving everything around. I am feeling much better, thankfully, than it was this time a week ago. Yeah, good times. I'll fill you in sometime on all the behind-the-scenes drama that has unfolded over the past week.
You got it.
It's been fun. But speaking of filling us in, why don't you do it really quickly? You haven't joined us in a little bit. Why don't you fill us in on what's new, what's cooking over there in the land of Shift Search since the last time we chatted?
Oh, thank you so much. First of all, thank you for everybody just even tuning in and everything like that. So I like to start off by saying a shout out to my favorite holiday, which is July 4th. Just a regrouping and just knowing what privileged lives we live by living in this country. So I wanted to start off by saying that. So I'm so grateful to be in this country, and I think everybody should be. If they haven't, it's a good check-in. And so regarding to the company, our usership continues to grow literally every month on month. And as the markets get more volatile, people are realizing that it's actually worth it to search before you actually put on a trade, to get a check-in on the market, to get the flavor. You don't want to be buying a bunch of calls when a bunch of open interest on puts are keep opening up day after day after day. So this has been really helpful. And secondly, we announced a deal last week about using real-time data with the Pith network, the decentralized network. So that's huge. We're going to be eventually rolling out real-time data across the entire Shift Search platform. That's our goal. That's our ambition. And we're using clever things with clever companies out there, like, the Pith network that has all the market makers combining in it. So that's what we've been doing. And we've rolled out at least some equity real-time pricing that's available off the Pith network on shiftsearch.com. So people have access to real-time right there. So we're just taking advantage of that. And we have a brand new UI coming out next week, which is going to be really cool. So we're excited about that. So all good things. We're making on the business end, we're making commercial deals, which is pretty exciting. And we're literally doing exactly what we set out to do, regardless of the market's conditions. And we're just helping people one step at a time, in our opinion. So that's it.
We've been feeling that question a lot. Sounds like you think the answer is yes. The question we've been getting a lot is, is kind of the meme stock, meme palooza, the call buying frenzy that we saw last year. Is that pretty much dead, and has it all been replaced by a lot of put frenzy to the downside? Sounds like your answer to that is yes, Saad.
Yeah. And I mean, when we have these, like last week was Wednesday and Thursday, we saw, Tuesday and Wednesday, we saw a nice rally. It was a 100-point move in the S&P. And again, you'll see the call volume increase on Shift Search. And of course, the teeny options, under less than $1, you can see the volume increases on that across many big names and the cheaper names like AMD and the usual suspects. And what's interesting about that is that, you don't see that kind of frenzy on longer dated options in the big stuff like the Google or, any of these expensive stocks. And so, and then you'll see the rally come off. And whenever we're starting to see that, whenever you see a significant amount of call volume come up, it's a time for pause, because these rallies keep getting it's like everybody gets sucked into the rally, and then boom, somebody just comes. It's like a fly swatter. That's what I think of. I think of like these rallies and like, oh my God, is a fly swatter coming or not? And then boom, it just gets smacked down. And so I see the volume increasing, definitely. But at the same time, the big boys, it's relatively stable. So it's just a lot of retail people who are trying to catch for in the last 2 weeks at least, try to catch the falling knife. And that's just so expensive. It's not even dangerous. It's just expensive.
You're joining us at an auspicious time, July 1st. So we now have the first half of the year in the books. It's on the record books. And now we just had the Flowmaster, Henry from Trade Alert, on Vol Views a little while ago. He kind of did an interesting breakdown of some of the interesting trends that he noticed over the course of the past 6 months from an options perspective. You guys have been analyzing all the flow yourself over the past 6 months. Any other trends or highlights really resonate to you over the first 6 months of the year here, Saad?
Yes, I would say the amount of longer dated puts I've seen, and put spreads, especially in SPX, SPY, and IWM, for example, it's been incredible. And then more importantly, when you come on our site, you can see the breakdown of the volume, and it's just been neck and neck between calls and puts. It's literally no man's land. And you have to have a lot of patience. And if you have a lot of money, good for you. And you can trade this market any way you want. But if you have a limited account and you care about risk management, it's more than essential to actually look at wingy flow, more wingy puts, and see how big money is looking at it and where the money is going overall. And a lot of the money has been, just because it seems expensive, just because vol is up, but the volumes are still relatively cautious. Apart from the retail frenzy, you'll see volume come up and calls and stuff like that, but that's only on, does it sustain? That's the problem here. It's not sustaining. And so I like to look at some of these SPYs and the big guys, and you look at the amount of puts that continue to trade, especially when we start to rally. Obviously puts get cheaper, but this vol is maintaining, and the level of puts is just incredible. So I'm constantly glued to how SPY, QQQ, SPX, the puts are behaving on that. And that's just so telling. And IW1.
Would you say in aggregate, these long-term puts, are people mostly buying to hedge more downside, or are they looking to take advantage of these puts to try to get in at some lower levels by selling them?
I think it's more to the downside, just because open interest continues to increase on them. So that's my understanding of it.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.